day to everyone joining us from around the world, whether just waking up midway through your trading session or winding down through the night. Welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation. It's window into the engine room of one of the most fast-growing and forward-thinking firms in the industry. And of course, I am not here alone. I am joined by two remarkable guests who help shape what WeMasterTrade represents today. Skilled traders, mentors, and role models within our community. So first, let me introduce the ever-composed, always insightful Vincent. Welcome, Vincent.
Thank you so much, Aidan. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely, and next to him is someone who brings sharp analysis and clarity to every shot and conversation, and she's strategic, she's sharp, and she's a real force in our trading space. So please welcome Scarlett.
Thank you, Aidan, and hello to everyone in the chat. And I'm genuinely thrilled to be here. What excites me most about today is what we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotion to scaling and long-term profit sharing. If you ever had questions or even doubts, today is the day to ask them.
And that's exactly what we are here for. Whether you're brand new to WeMasterTrade or already a part of our Funded Trader program, today's live stream is going to give you the full picture, not just a highlight reel. So over the course of this session, we're going to work through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing things differently from traditional brokers or platforms. So now, I want to be clear, this isn't just about sales, this is about understanding, and we want you to know that what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
Well, and speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how we formed as a funding project, not a broker, is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we will be discussing in detail. We will explain the logic behind each one, what kind of trader they ever look at our package and thought, which one is right for me. Today, we will answer that.
And more than that, we also do a live comparison between packages. We'll break down pricings, account size, maximum drawdowns, consistency rules, and even payout side by side to help make a fully informed decision. It's one thing to see number on a screen, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what daily loss limit is, how it's calculated, and why it includes both flows and floating profit and loss, and how to avoid violating it, especially overnight. We'll go into the maximum total loss, the consistency ratio, and we'll even address common misunderstandings about trade sizing and risk spread trade policies.
And we won't just explain rules in isolation, we will explain them in the context of live trading decision. I will share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we have had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our scale-up plan, which I personally this is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathways in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers, and it's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from other platforms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you, up to 90%. But there's more to it than just the percentage. We will explain the full payout cycle, threshold, and timelines today.
So I know many of you watching today on Just Traders who also advocates, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals tracked, and more importantly, what you need to qualify for payout, including a detailed explanation for the two referral rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, promos, scale-up pad, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching, and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say this. So WeMasterTrade is not just a platform, but it's a commitment to build rogue traders to create fair structures and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. So let's dive into the journey together. Let's begin once again. Welcome to the WeMasterTrade live stream. So now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you're putting your trust and you're trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this segment is about origin, intentions, and impact. It's about how WeMasterTrade began and what values underpin the firm, and how those values translate into real tools and real outcomes for traders like you. And to work through that, I'm joined as always by two people who live and breathe these principles, Vincent and Scarlett. So let's start at the beginning.
Thanks, Aiden. To truly understand WeMasterTrade, we need to understand why it was recreated. Unlike many broad firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label. That is a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders, and that's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk and we give you the roadmap. You bring the skill, but we also know that skill alone isn't enough. So, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. So the WeMasterTrade Academy isn't just about theory, it's about implementation. So we've designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 2018 certification, which confirms our educational products and trader development programs meet record international criteria for quality, structure, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In the industry where many so-called law firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We are not here for a season, we are here to build career.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, and the Philippines, South Africa, all talking about how we must trade, help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with real retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. And we have students become full-time traders. We have women re-enter the finance world after career breaks, and we have young professionals from underbanked regions finally access to markets with a funding account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where a team of experts and educators share quickly inside trading psychology breakdowns and market reactions. So we believe that learning never ends and we keep our trader informed. But let's also talk about culture. So what makes WeMasterTrade different isn't just the product offering, it's the community mindset. So we actively promote trader integrity, respect for competitions, and knowledge sharing. So whether you're in a Telegram group, watching YouTube series, or engaged with us on live support, you see that we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform. And your consistency determines how far we can scale together. The mutual accountability is rare, and it's something we are proud of.
And if you ever doubt whether this path is real, whether trading career is truly within reach, I would encourage you to read the testimonials, take a look at our funded accounts, and connect with people who've gone through the system. The stories are real, the capital is real, and the results speak for themselves.
So to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. So we are here to challenge these days code trading access and to build systems that reward performance over promotions and to create scalable income opportunities for traders around the world, regardless of their starting point. So this is more than a platform, it's a trading movement. And if you're ready to be a part of it, today's live stream will show you everything you need to know. So because it's an scholar for that deep and honest workthrough, so coming up next, we are going to take these foundations and connect it directly to our actual offering. So that means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect from each. So now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move into one of the most essential parts of the live stream, an in-depth discussions about account packages. So this is where it all begins, from most traders choosing the structures that best align with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package of WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Aiden. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we're built into two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetite, and timelines.
And let's begin with a challenge model, a two-phase evaluation system built for traders who want to prove their skills before allocated capital. Is structured and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are 3 stages in total: phase 1, phase 2, and then the funding stage.
So take for instance our $10,000 challenge, a great starting point for the traders who want to minimize upfront costs while building a track record. So let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is 800, without reaching a 5% daily loss, 500, or a 10% overall loss limit, 1000. You will have an unlimited time to achieve this. That's a key difference for many platforms. We don't pressure you with deadlines.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%. That is $600. The risk rules remain the same. And here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed that target.
Finally, once both phases are clear, you enter the funded account, where you trade with real capital, have no profit target, and your profit share jumps to 90%. That's one of the highest in the industry.
And this account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you're still refining your strategy or want to get a feel for WeMasterTrade risk frameworks before scaling, this is the perfect package to begin with.
So now, for those who are confident in this strategy and want to start with a launcher's account size, so we offer 25,000, 50,000, and 100,000 challenge packages So the structures are similar, two phases, the same 5% dailies and 10% total loss limit, but the profit targets scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, and giving you room to adjust position sizing.
The $25,000 to $100,000 challenge are ideal for traders with more capital management experience, especially those looking to eventually scale into larger further accounts. And if you're already past other block strategies or have a strong verified trading history, this is a good setup.
So every challenge packet comes with a one-time fee, for example, just $45 for the 10K challenge, and this fee is refundable once you become funded and meet minimum performance conditions. But what happens if things don't go your way? So you're eligible for a 30% reset discount to start fresh.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders and trainers to trade real capital from day one. No evaluations, no demo stage, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, reference, and goals. Today, we're going to walk you through each of the 5 main instant funding package: Standard, 5-10-10, 5-10-0, 5-10-10 no BC, and Customize. We will compare the details, but more importantly, we will help you figure out which package is right for you.
So let me set the scene quickly. So all of our instant funding packages give you live trading access from day one. So that means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, a balance-based limit scale plan toward 1 million, and support for EAs, swing trades, scalp and even HFT. So now, let's go package by package, and as we go, Vincent Scholar, I want you to jump in with real advice and who should actually choose which one, and what kind of traders you've seen succeed with each.
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You are getting up to 300,000 in capital, which are very manageable 4% daily loss limit and 6% overall loss limit.
And it's like a calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there are serious earning potentials even if you're taking a slow and steady approach.
So what about commissions?
It's competitive across the board. Forex at $4 per lot, gold at $4 per lot, index at $1, and stock at just at 0.07 per lot.
And everything is allowed: news trading, escaping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategy and wants a full range of assets and plans to play along the game, this is your sweet spot.
Well, it's perfect for intermediate to advanced traders who already know their age but don't want to stretch with a target piece challenge. And if you ever have an account blown due to unrealistic rules, you'll find the standard model refreshingly fair.
I would also say it suits swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
So moving over here, let's talk about the 5-10-10 package. Same capital ceiling up to 200,000, but now you get 5% daily loss and a wider 10% overall limit. So why does that matter?
Well, that extra cushion is massive for traders who scale into positions or take multiple entries per setup. You've got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, new tradings. It's a very trader friendly.
This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a tested intraday strategy and just need to some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit target. The clear milestone motivates some people, especially if they are payout oriented.
So now, here's a personal favorite, the 5-10-0. So you get 5% daily and a 10% overall loss, but no profit target, not zero.
And that's a blessing for high precision traders. You are no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snippers. If you enter 3 to 5 trades a week, this is your space. You're not personalized for patients. You actually work for it.
And who is for? For veteran swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you will thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
So now for the rule breakers, or rather those who don't want to be evaluated how even their profits are, the 5-10-10 new PC removes profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you're not just required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade careers are not allowed in this one. So it's for manual traders only. And you need to trade responsibly. But for aggressive traders who sometimes hit big spike, this is the place.
This is perfect for high risk reward traders or anyone who has issues with consistency rules at other firms. If you trade how you want, just keep it inside the drawdown box.
And last but not least, a customized packet. So this is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust the daily loss, overall loss to your liking. Plus, you can fund up to 400,000 more than any other account.
It's premium, flexible, and comes with all trading styles allowed, including EA's new trading, weekend holding, HFT, and more. So, who is this for? Top-tier professionals, ex-hedge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say, if you have tried other models and nothing quite fits, build your own blueprint with Customize. That freedom is rare.
So to sum up, every instant funding package we offer comes with clear risk parameters, back commissions, deep market access, and free profit potential. There are no limits. There are payouts start as early as 1 day in.
And no matter your strategy, scalping, swing, hour, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you, but the real secret, pick the account that fits your discipline, not just your dream. The right fit always outperforms the biggest promise.
Up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. So, traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right. It's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, well, that's where the games really begin. And the number one reason traders lose their account, it's come down to one thing, the day loss limit.
Yes, the dread day loss is the one rule traders think they understand until it kicks them out of their account at 3 and 17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, really works. It becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing is here, the daily loss is calculated from the higher of either your balance or your equity as the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
So let's work through a live example. Imagine at the start day 5, your balance is 105,000. Your equity, however, is higher 107,000 because of open closing profit.
If you are on a 4% daily loss limit, we calculated it with up the higher number, 107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of that day can drop below $102,000, or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below the threshold for even a second, well, that's it.
Now let's reverse it. Say this the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so 4,000.
So now your equity must chase above 96,300 a day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
The system will send the market order to close all trades, everything liquids. Your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker. The auto close happens when the system detects the threshold will cross. But due to the market fluctuation, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intended to take like a 3,900 loss, one sleep page strike in for goal on Nasdaq and then loses 4,200. That's why we don't say don't ride the ashes.
Alright, let's talk about how to avoid violating this rule because this is where the bro mindset kicks in.
First tip, know your buffer. Never blend trade to take you right up to the edge of your limit. Leave at least 10 to 15% room below the demand loss, especially in volatile markets.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at a balance all day, but if your floating loss is dragging your equity, you are heading toward a violation.
Tip 3 is a dashboard or tracker. Inside WeMasterTrade, we provide this dashboard to show your live loss status. Use them, check them, don't rely on your memory.
Also, bulk trading after a big loss early in the day. If you lost at 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFP with full loss size, you are practically begging to break the daily loss rule, cut position size, and right post volatility.
So what are the top rookie mistakes you see when it comes to daily loss?
Number 1, over leveraging. Traders opening position that are 5, 6, 7 of their accounts, thinking they will close quickly. But if the trade turns red fast, it's already too late.
Number 2, holding overnight without tracking exposure. If you hold 3 trades overnight and wake up to a 60 bip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter, well, they're not. Remember, equities includes both floatings and closed position, so the total equity line is your score.
I always say this to new trader. The daily loss rule isn't your enemy. It's your account airbag. It's designed to protect you from doing something irreversible.
Exactly. A forced discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you'll last longer than 90% of the market.
And one last note, this isn't just about rule, it's about trust. So WeMasterTrade funds you because we trust that you manage risk responsibly, but they also there to protect that trust on both sides. So next up we're going to enter a short break, and after that we're going to continue with the other rules that we have at WeMasterTrade. Welcome back, traders. So in the previous segment we've covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we'll move on from the daily boundary to the absolute boundary. So I'm talking about the maximum loss rule, also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they had chipped away at their accounts and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is a MAP loss rule? So let's define it simply as the total maximum amount you're allowed to lose across all trades for the entire life of your account. If your equity, that is real-time capital, including open trades, ever drops below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
So let's walk through a concrete example. Suppose you have an instant money account with an initial balance of 50,000 and your net loss limit is 6%, which is 3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you made 1,000 yesterday, the total loss from your high risk point back down to the threshold is what matters.
And remember, this will include both closed losses and floating losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit account closed.
And just to be clear, it's not about the net gain or lots of cut trades, it's about where your equity stands in real time relative to that stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you are in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly, and now you have $4,000 in total buffer because 51,000 minus 47,000 equals 4,000, so your profits give you caution, but the floor never moves.
So what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your accounts might close out below that line. That's just execution reality.
And most importantly, when it's reached, that account is permanently disabled, so you need to purchase a new package if you want to continue trading. No reset, no rollback.
Well, alright, let's get tactical. So how do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss law. Don't wait for the dashboard warning. Calculate it manually.
Well, second, use your profits as protection, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shut down in a few minutes.
Fourth, stay cool when you are close. If you are down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
Well, and about the biggest mistake, underestimating floating drawdown, traders roll three loser and think, okay, I'm still got room, but they forget about the 4 trade floating minus $1,800.
Second, traders who trade recovery after a bad day. They lose 4% in one day, come back swinging the next day thinking they will make it back, and instead take another 2%. Boom, violation.
True, and this one hurts, ignoring sleep paid during major news. Even with a tight stop, news can grab you straight through your limit.
The man loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know see their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently brushing up against your math loss, the problem isn't the rule. The problem is your system or your psychology.
At WeMasterTrade, we're not just given capital, we're teaching a structure, and the macro through is what separates gamblers from professionals. So remember, your max loss is the percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance, and it includes both close and floating losses, and once breach, your account is gone. So coming up next, we'll explore the consistency rules and why steady profits matter more than big spike when it comes to growing, scaling, and getting paid.
If you ever make $5,000 in one day, then make $200 the next 4 days and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
So, alright traders, we have talked about the day loss limit, we've just covered the maximum loss rule, 2 pillars of protecting your capital, but now it's time to shift gears just a little and talk about not risk, but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and can actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time, or if you are just hoping to hit one big winner and roll the dice.
And more importantly, is also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you're funded and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. So the less consistent, meaning you have one giant profit day, and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit come from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
The formula is really straightforward. Take your best trading day profits and divide it by your overall profit since you started the account. Then multiply by 100.
So the best is divided by your total profit multiplied 100 equal the profit consistency ratio.
And just to be clear, best day refers to your highest close profit in a single calendar day. And total profit is the sum of all your close profits, minus any close losses or open losses across the life of the account.
Well, for example, let's say you had the following result. Over 5 trading days, day 1 plus $100, day 2 you earned $200, day 3 you lost $50, day 4 you earned $100, and day 5 you earned $60.
That means your total net profits across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal $410.
And your best day was 82 and that's $200 in profit.
So now we apply the formula $200 divided to $410 input and multiply that by 100 and you will get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough. They had one big day that made almost half of their total profit. That's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you are relying on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get filters, and who get trust with more capital.
So let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So, how to improve your consistency? Let's say you're over the limit. Don't panic, you're not disqualified. You just need to keep trading and even out the curve.
And here's how to do that. First, trade smaller size for a few days. Second, take smaller control win. Aim for 200-300 days. 3. Avoid big swing trades that could spike your ratio again. And lastly, spread profits across multiple days, not one monster setup.
And for those users using EAs monitor your equity curve, if your EAs go in profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this through unless it's configured with payout logic in mind.
And the common mistake to avoid is step 1, traders hitting target early and taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Mistake number 2, overtrading after a big day. Thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
So mistake number 3, thinking this row is just a huddle. No, it's not. It's a reflection of what we actually look for our master traders.
At the end of the day, this isn't about controlling you. It's about building habits that can handle scales. If you can be consistent with 25,000, what happens when we give you 1,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen and time again the traders who respect this rule. They're the one who gets multiple payouts, referrals, and grow into six-figure funded accounts.
So don't fear the rule. Understand it, use it as a feedback tool. If your ratio is too high, great. That means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
So to recap, this rule is about balance, not aim to keep your best day under 20% of your total profit, spread your wins across multiple sessions, and monitor your progress in the dashboard. So we work through the daily loss limit, tackle the maximum account loss, and examine how profit consistency shapes your long-term payout and growth. And now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you are risking from one trade to the next.
And this rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing the position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down. Let's say the core of risk contingency rules is simple. You're not allowed to lose more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both low losses and floating losses. Even fees, commission, and swap are counted.
And for some accounts, like the 510 no BC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
So, because consistency isn't just about the outcome, it's about the process. So the more erratic your position sizing is, the more volatile your equity curve becomes, and that's what makes you hard to scale.
This rule protects both you and the firm. It helps reserve capital, prevent large equity swings, and make sure your edge play out over time.
Think of it as your account heartbeat. If your position size pulls up and down, 0.5 loss one day, 5 loss the next, the system flexes. That's not structure, that's chaos.
So this is where it gets technical. Let's stay with that. The term trade idea isn't just one order, it's a group of trades that share the same logic.
If you open 3 buy positions on each AUUSD goal at different times, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they're seen as a single, ununified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and apply the 2% rule across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD USD, and each position has its own distinct direction and assets, those are 3 separate trade ideas, and each one can risk up to 2%.
So let's say you go and buy gold and then you go buy again and again. So now you have 3 open positions in the same direction on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or eventually loss from those positions exceeds 2% of your starting balance, boom, you've broken the rule.
Another mistake, opening multiple gold buys, then closing one 10 minutes later, and 2 orders together. The system still group trade close within 3 minutes of each other, so be mindful of your close timing.
So let's go hands-on. Suppose you have a 100,000 account. The 2% max risk per trade idea means you can't lose more than 2,000 in any trade idea total.
So you open 2 gold buys, 1 loss each. You don't play a stop loss. New hits, market drop 100 bips. Each loss lose 1,000. That's a 3,000 total.
You're right on the line. If slippage or swap as a few extra dollars, that is rule broken, account flag or liquidated, depending on enforcement model.
And on-time accounts, especially instant funding accounts with stricter tolerance, this reach may result in lots of funded sales or immediate closure.
So, pro tip to stay risk consistent. Tip 1, set your lot size based on account risk, not emotion. Know how many pips equal to 2%.
Tip 2. Use stop slot orders religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3. Don't start trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro clause if needed. Keep the total exposure below 2%.
Well, the most common reason traders break this rule, stacking multiple entries on one trade idea thinking is still separate.
Second, opening high risk trades after wins, assuming they are playing with house money. Spoiler, the market doesn't care.
And the third, neglecting floating loss. a trade may not be closed, but floating red, still capital will be 2% risk.
This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, and real traders follow this.
Well, exactly. We're not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk is the foundations of scalable capital, those are the ones we grow. Those are the traders who go from $25,000 to $1 million.
If you want to be a professional trader, you have to see things like one. And professional traders always know how much they are risking on every trade, every day.
And if you're still guessing your lot size or opening trades because of the setup feels right, take this as your sign, set it up and get structured.
So this is more than a rule, it's a habit. Build it now, and the path to bigger capitals and lots of payouts become way more predictable. That, my friends, wrap up the 4 essential rules at trading at WeMasterTrade. This include the daily loss, the maximum loss, the profit consistency, and the risk consistency. So master these, and you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. So, everyone, this is it. You've made it through the risk rule, the profit conditions, and the structures of your account. So now let's talk about why it's all worth it, because at the end of the day, we know what every trader really wants.
More capital, more room to trade, bigger loss, higher reward, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale Plan is built to provide. This is your roadmap from beginning a small account trader to managing a $1 million funding account. And it's not fantastic, it's a clear path with defined milestones.
The Scale Plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violations, and demonstrate risk control, we increase your capital allocation. In other words, you earn more room to trade without spending more out of the bucket.
And let's be clear, this isn't tied to subscription model or gimmicks. You don't pay for scale up, you earn it through consistency, profit, and discipline.
And the scaling is impressive. We're talking doubling, tripling, and eventually scaling you all the way to 1 million in funded capital, depending on where you start.
So at WeMasterTrade, we offer 2 types of scale plans, depending on your account type, which is the percentage-based scaling and the amount-based scaling.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you are promoted to level 2, where your capital increased by 50%.
From there, the growth explodes. Level 3 is 3%, level 4 is 600%, level 5 is 1,200%, and level 6 is 2,400%, and finally, the maximum is $1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles so the system knows you're not just performing, you're stable.
Now, for instant funding accounts, the scale-up works with set dollar targets, and the plan adjusts depending on your initial funding size.
Let's take the $10,000 funded trader as an example. Here's how the levels look. Level 1 is $10,000, level 2 is $15,000, level 3 is $30,000, level 4 is $30,000, level 5 is $120,000, level 6 is $240,000, level 7 is $480,000, level 8 is $960,000, and level 9 is $1 million.
So each step is its own profit target, usually 10 to 20%, and some level require profit consistency, especially in the early stages. So once you're beyond level 3 or level 4, the consistency requirement drops and it becomes all about your performance and discipline.
If you start with a 25,000 account, your first profit target is 5,000. Hit that with consistency, you will bump up to $37,500, then 57,000, then 150,000, all the way to 1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There is no time limits. You grow at your own pace as long as you stay within the rules.
So to move to the next step, here's what you need to do. So you need to reach the specified profit target, avoid all violations, especially MAT loss or daily loss, complete at least 2 successful payouts, and maintain profit consistency if required for that stage.
Once all conditions are met, we issue a personalized trading agreement and upgrade your account size.
And the best part, with a bigger account, you earn more without increasing your risk per trade. That's real capital leverage. So the common pitfall to avoid, let me be real for a second. The most common mistake, over trading to force the target. Traders push too hard, trying to scalp fast and end up violating drawdown.
Another one, ignoring consistency in the early levels. If you make 80% of your profits in one day, that payout it won't qualify. You need to spread your wins.
And of course, not planning your growth, you should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibility. If you are straight trading 10,000, how will you handle 300,000?
Exactly, that's why the scale up is step by step. We test your psychology, your discipline, your patience, long before we hand you 7-figure capital.
And that's what makes it real funding, not demo hype, not a gimmick. It's a structured capital ladder for real traders.
So if you are wondering whether it's worth staying consistent, passing challenges, and trading patiently, this is your answer. From 10,000 to 1 million is possible, and it's been done repeatedly by WeMasterTrade traders.
It starts with one rule following, profit making, discipline month, then we grow it.
So take your time, learn the structure, respect the rules, because here at WeMasterTrade, when we say we scale performance, we mean it. And with that, we wrap up the full workflow of WeMasterTrade funding system from account setup to risk management. To scale up, whether you're starting with 10K or 200,000, the road to 1 million is real. So next up is the news calendar analysis.
So, the first news is the early session recap at Asia Pacific at 6:45 a.m. NZD trade balance. Well, this is worse than expected. This shows a much larger deficit than anticipated, indicating weaker export to or higher imports. So NZD likely drop following this news. Well, the tips for traders watch for the NZD, USD or NZD GPY volatility post-release. Well, at 9:30 a.m., AUD monetary policy meeting minutes. No actual figures, but the minutes are crucial for rate outlook. Well, the market sensitivity, traders monitor language on inflation, labor market, or policy bias. Tip for traders, look for AUD crosses reacted to dovish or hawkish tones. The second news is European session focus at 2 p.m. GBP public sector net borrowing. Well, the actual is 20.7 billion and the forecast is 17.4 billion. Higher than expected borrowing indicates government spending exceeds revenue, could put pressures on GBP, especially GBP USD or GBP GBY. The tip is high borrowing may worry investor about fiscal stability. At 5:15 p.m., GBP BOE government rally speak. Well, critical for GBP traders, daily comments can shift rate expectation quickly. You can watch for tone on inflation elections, wage pressure, or recession risk. Any guidance on future rates, highs, or pauses. The tip is GDP pairs often spike during and immediately after the speech. Use tight risk control if trading live.
For the third, US session hot event. 8:30 p.m. USD Federal Chair Powell speak. Key event for USD and indices like NAS 100, SPX 500, and US 30. Watch for policy hints. Is the Fed learning hawkish or dovish? Strategy tip. Power tones often impact growth in AU USD and USD bears. Look for breakout setup re-speech. For 10 p.m. USD Richmond Manufacturing Index. Forecast A-2, reverse A-7. A less negative ring suggests slow improvement in manufacturing. Minor mover unless it's a big surprise. Then USD could react modestly. He suggested tracking bond for like just what GBP USD, ISAU USD, and AAS 100 ahead of Bailey and Powell speeches. Interactive poll of 4 viewer. Do you think Powell will hint at on a rate hike? For the trading strategy tips, use betting orders around high impact speech times. Avoid over leveraging during unscheduled question and answer response.
So, thank you all for such an in-depth analysis of today's news calendar. And thank you all to our audience for joining us today. We hope this session has been informative and that you are as excited about the opportunities at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.